Now, those of you who have been watching these videos in the past will be not surprised to hear me say that we've got more of the same coming. All the way through we've talked about the gold price being quite strong and really leading the resource sector, and that's reflecting all the imbalances that in the world in respect of debt levels in a lot of the OECD countries. Now we're seeing that strong gold price. We're seeing gold over at 1150 overnight, and I think we're going to see it move up to the $1,200, $1,300, $1,400 an ounce reasonably soon. The demand for gold is still very robust, and we're seeing the major gold stocks starting to really perform and look as if they're going to make a major upside breakout. Now the gold price is moving because of a whole range of reasons. Mine production has been declining for the last 10 years, and that has a minor impact. We've seen India buy that 200 tons of gold from the IMF, and I'm sure that other central banks around the world of smaller nations are looking to buy more gold as well. The American dollar is weakening. It has been quite weak over the past few months, and that certainly is helping things. The decision by the US Fed to keep interest rates low for another year or so basically means that the US dollar will be much weaker against other currencies, and the so-called carry trade, where people borrow low interest rate cost US dollars and buy assets, I think will continue. The weight of money in the United States banking system also certainly suggests that we'll see flows of funds out of the bank's cash management into equities. We've seen the American equity market being very strong. It'll flow into commodities, but particularly commodity sector stocks. One of the things that we've been talking about over the last couple of weeks is a very long-term share price chart, or the S&P Gold Index, which has been put together going back to 1921, and this is from Eric de Groot and published on the JS Mindset webpage. Now that's an outstanding chart which basically shows that for the last 28 years the gold index in the United States, the Philadelphia Gold Index, has been going sideways for 28 years, and now it's about to make a break, and in doing so it means we're going to see very robust performances in the major gold stocks and quite fantastic performances in some of the smaller gold stocks. So gold is really driving this market.